It's wonderful to welcome all of you to Hunter College tonight. I'm Jennifer Rabb and have the extraordinary privilege of being the president of the wonderful Hunter College. Tonight is a very special evening because we have three extraordinary public officials with us to address one of the most important problems that we have in this country, the economic impact of the financial crisis on the average citizen, and how the government can do better to ensure people's security and financial security and housing and education, and the list goes on. We are so lucky to have our phenomenal Congresswoman Carolyn Maloney, who is our own from the East Side, so I just want to give her a wonderful round of applause. Someone with an extraordinary career in public service who is now really making his mark in just a short time as one of the great attorney generals of this country, Eric Schneiderman. And somebody that we as a country are really lucky has stepped up to an incredibly important public leadership role, and that's Richard Cordray, who I urge you to take a look at his bio, someone who's dedicated himself to every sort of public service, legislative, executive, and is now takes on this challenge of starting the new Financial Protection Bureau. So we are just lucky that people like Mr. Cordray are accepting these challenges. I was saying to Richard a few moments ago, as a college president, one of the most pressing financial challenges for us, of course, is the issue of student loans. And even as a public college with a really, compared to private colleges, a low tuition, and I thank Attorney General and Congresswoman Maloney for protecting CUNY's rights to keep its tuition low, our students are still saddled with debt. And one of our students was so concerned about the way debt is handled that she started an online petition, got tens of thousands of petition signatures, and has changed the way Sallie Mae does business. So as an introduction to Director Cordray, we know you're going to do a wonderful job, and if you don't, you have a vigilant number of students at Hunter College and all through New York City and New York State. We are so lucky that in your initial listening tour, you have chosen to come to New York City to Hunter College to speak to the public and to hear about their needs for more support in the banking system, the credit card system, the student loan system, and the list goes on. So we thank you in advance for all we know that you will get done, and to Eric and Carolyn for being here tonight. It is a pleasure now to introduce Zixta Martinez, who's the Deputy Citizen Affairs Commissioner at the agency, and she will take us more about the program. Zixta?
I just got a promotion. That's terrific. Thank you, President Jennifer Rabb, for the gracious and warm welcome. It's good to be here at Hunter College, the most diverse public college in New York City. My name is Zixta Martinez. I'm the Assistant Director for the Office of Community Affairs at the Consumer Financial Protection Bureau. Welcome to the Consumer Bureau's Town Hall on checking accounts. One of the highest priorities at the Consumer Bureau is to communicate frequently, substantively, and candidly with a wide range of industry, consumer groups, and consumers who are affected by our work. We have held public town halls in Philadelphia, Minneapolis, Cleveland, and tonight here in New York City. We also recently held our first field hearing on payday lending in Birmingham, Alabama. And we know that this is just the tip of the iceberg, but it's important. Listening to you informs the work that we do across the entire Bureau. Let me give you a very quick overview of today's program. We have three exceptional speakers lined up: Congresswoman Carolyn Maloney, the Attorney General of the State of New York, Eric Schneiderman, and Richard Cordray, Director of the CFPB. Immediately following these speakers, we will turn the microphone over to you to listen to you and to what you are seeing and experiencing in the area of checking accounts. Now I have the distinct pleasure of introducing Congresswoman Carolyn Maloney. Congresswoman Maloney was first elected to Congress in 1992. She has been described by the New York Times as a prolific legislator, one of a handful who stand for their moxie, kind of the way New Yorkers themselves often do. And the New York Post hailed her as one of New York City's hardest working lawmakers. With her many legislative accomplishments, including the Dodd-Frank Act and the creation of the CFPB, Representative Maloney has earned the respect of her colleagues and constituents. Welcome, Congresswoman Maloney.
Thank you. I am so thrilled to be here, and thank you, Jennifer, and your student body for allowing us to be here. And it is always a great honor to welcome someone to my district who is as important as the director of the CFPB. Richard Cordray, we are honored to have you. And for our own Attorney General, Eric Schneiderman, aren't we proud of him? Standing up, being heard, making changes. I supported him in his election, but he has exceeded my expectations in the way that he has had an impact on policies and making them better for a balanced economy and protecting consumers. So I'm very, very thrilled to welcome to my district the CFPB. My district in New York City is not only the center of the financial district in New York City and state, but for the United States. And we are also the consumer consumption capital in many ways with Madison Avenue and all of the New York shopping. So I think the CFPB has picked a perfect place to announce their initiatives to look into banks' overdraft policies. For far too long in our financial system and its products, any concerns about consumer protection came in a distant second, a distant third, or was not thought about at all. But with the creation of the CFPB, we now have one agency which is looking out for you, which is focusing on consumers and making sure that they're treated correctly. Now anyone who opens a checking or savings account, anyone who takes out a student loan or a mortgage, anyone who opens a credit card or takes out a payday loan will have this federal agency on their side with their top concern to protect them. And all of this will be housed in one place. Before the creation of CFPB, it was all over the place with responsibilities that did not coordinate or did not really work properly. Hopefully now we won't have subprime crises in the future. The CFPB has been open for business only since July, and we are already seeing the impact it is having on consumers. It almost immediately launched the Know Before You Owe program, which will make required disclosures for mortgages and student loans easier to understand and use. The Bureau has put forward drafts of a new mortgage disclosure form, which will eliminate the fine print and clearly lay out the cost and fees associated with the mortgage. This form will serve as a tool for consumers who will be able to compare the terms and conditions and other options before them. The CFPB is doing the same for student loans by creating a shopping sheet for consumers so that students will better understand the payments they will be making after graduation and so that they can make the right decisions for themselves. But it's not just mortgages and student loans. The CFPB will touch diverse populations, and with its new enforcement efforts, it has created two new offices, one focused on service members and their families, and the other focused on older Americans. These are two populations that have been abused in the past. They now have an office focused only on protecting these segments of our society and making sure that they are putting an end to abusive practices towards them. So the work is being done in this office, I think, is truly, truly extraordinary. And tonight, the CFPB is here on a fact-finding mission in another area that is near and dear to my heart, overdraft programs for checking accounts. This is a wonderful opportunity for all of you to be heard and to voice your particular concerns, challenges, and problems. that you've had with overdraft or any consumer area. The Federal Reserve now requires that consumers must opt in to these programs. But we want to hear tonight, do you think that is enough? What other protections do you think should be there for consumers? I am interested in hearing you, and it is an extraordinary opportunity for you to speak directly to the head of the CFPB, Richard Cordray, who is himself a distinguished public servant, having served as AG of Ohio. The CFPB is a data-driven agency, but it's not just relying on data from the industry. Input from you and from other consumers is critical to their decision-making process. So I hope that you will speak up tonight and be heard. And believe me, you are speaking to the gentleman that can make a difference, that can make your concerns a focus, and turn the reality and the problems that you put forward into a rule or a law that can protect you. To give you one example, when President Obama was elected, one of the first bills he signed into law was the Credit Card Holders Bill of Rights. The Pew Foundation came out with a study that estimates in 1 year alone, this bill saved you, consumers, over $1 billion. That is tremendously important. So this is an agency that is critically important not only to consumers, but I would say to the safety and soundness of our financial system. The subprime crisis that abused consumers literally brought down this great recession that we're still suffering with. We now have a director who is fighting for us, a president who is fighting for this bureau, who helped create it. Let's welcome them, let's help them do their job, and make sure that they are strengthened so that they can help consumers and help our overall economy. I'm thrilled to be part of it. I am thrilled that Richard Cordray and the CFPB is in this important district. And I might say, we met earlier at the famous Roosevelt House where so many important decisions have been made, historic decisions. And I really feel that it's historic that the first meeting that Richard Cordray and the CFPB is having in the great state of New York is here at Hunter College, one of the great thought centers that has produced so many leaders in our country. Thank you for welcoming us tonight. Thank you for being here.
Thank you, Congresswoman Maloney. I now have the pleasure of introducing the New York Attorney General, Eric Schneiderman. Eric Schneiderman was elected the 65th Attorney General of New York State on November 2nd, 2010, and I understand he has a previous commitment, so that is your introduction. Please join us on stage.
Thank you. Yeah, I do have to speak and run. I appreciate that. It's the safest way to do an introduction. But I did want to make sure that I at least had time to pass by here, just to let you know how important I think Richard Cordray being here is, and how important the Consumer Financial Protection Bureau is to all of us, is to all New Yorkers, and is to all Americans. As many of you have probably heard, I've been very involved in the effort to dig into the conduct that brought down the American economy, the abuses in the mortgage market and the mortgage-backed securities market. And we have now, thankfully, had the commitment from the President of the United States to form, for the first time ever, a coordinated state-federal working group to investigate that conduct using all of the jurisdiction, all of the resources that we have, and I'm honored to be one of the co-chairs of that group. Rich Cordray and the Consumer Financial Protection Bureau is a part of that investigation. They are a part of that working group, and they are a key part of the working group. Our principles in going forward are three. First is you have to establish accountability. You have to reassert the basic American idea that there is one set of rules for everyone, that no one is above the law. Two, you have to get meaningful relief. You have to get meaningful relief for the homeowners and the investors that were hurt. And three, we have to make sure this never happens again. There are people out there trying to rewrite history, trying to say, oh, this was like an earthquake or a tsunami. It wasn't. It was a man-made disaster. It was caused by reckless over-deregulation and by a combination of greed and incompetence in folks who should have been watched, should have been restricted, and weren't. Passing Dodd-Frank and bringing the CFPB into existence is key to making sure this never happens again, because it's not just the mortgage markets where Americans were being abused. It has to do with credit cards. It has to do with student loans. It has to do with every area of financial life. And for the first time, we've got an agency that is on our side to protect us. Let me give you one example of my experience, and they've only been in business for a few months, but we discovered, as Congresswoman Maloney, who has been an incredible leader and fighter in this area, and you've got to acknowledge the people who are in the House of Representatives now deserve combat pay, what they are going through, trying to protect the CFPB, trying to protect our investigation, trying to protect anyone who's trying to do anything for working men and women in America on the front lines in the House of Representatives. Carolyn Maloney was there when this all happened and is a key part of keeping it happening. But my experience was we discovered scammers who were specializing, as she mentioned, in active duty service members. Very vulnerable population, young, relatively unsophisticated, move around a lot, don't have their families or mentors to talk to about things. So there are people who target them. We busted up a group at Fort Drum that was specializing in scamming soldiers there who were on their way to or from Iraq. This is about as low as you can get, right? And I realized that this same group had been involved in scamming people at a base in another state before this. And I thought, well, they're just going to move to another state. But I thought, now, because it's no longer the dark days of massive deregulation and no one minding the store, there's an agency to call. I spoke to the CFPB, I spoke to Rich. They set up a national database, so every local law enforcement officer in America now can enter the names of the folks who are scamming our active duty service members. We can find out who they are, what the company names are, and prevent them from just going over state lines. That's the kind of thing you get when you have the sort of investment in responsible regulation, in understanding that markets work best and when markets work for everyone, and markets only work when there's one set of rules and everyone plays by the same set of rules. That's what the CFPB has already done in the short period of time I've been around and they've been around. They're going to do great things for all of us. I have one message before I run out. This is a two-way street. New Yorkers, ladies and gentlemen, and those of you particularly who are not fortunate enough to live in Carolyn Maloney's district to be represented by someone of that quality, you have to make sure that we provide support. They're here to help us and explain how they're going to help us. You're here to tell them how you need help. We need to support them too. Understand that the architects of the bad public policies that made us vulnerable to the crash in 2008, the same kind of policies that led to the crash in 1929, are outselling the same neoclassical economic deregulatory stuff again. They will make this happen again if we don't protect the agencies that we've created to protect us, if we don't support and make sure that we fund the folks that are going to do the regulation now to make sure this never happens again. So as long as you're telling them what your problems are, just remember, we owe it to them to provide the support for their work. Carolyn Maloney's down there fighting every week against incredibly vicious opposition to any regulation, any reform. We need to support her. We need to support Rich. Thank you for being here. Thank you for your time. I look forward to seeing more of you in the weeks and months ahead and to reporting back on our success as we move forward with our joint investigation of the mortgage crisis. Thank you.
And finally, I have the distinct pleasure of introducing the CFPB's first director, Richard Cordray. Prior to his appointment, Director Cordray served as the CFPB's Assistant Director for Enforcement and as Attorney General of Ohio. He is currently working hard to spearhead CFPB's mission to make sure that markets for consumer financial products and services are fair, transparent, and competitive. Welcome, Director Cordray.
Thank you. It's just been a tremendous pleasure for us all day to be in and around Hunter College, to be at the Roosevelt House, where, as I noted earlier, there was so much work done in a previous era to respond to a national profound financial crisis and to start cleaning up the financial markets and make America livable again. That is, in some respects, our mission at the Consumer Financial Protection Bureau, as Congresswoman Maloney so eloquently stated here, and she eloquently states it for us every day down in the House of Representatives. I can tell you I've been up there to testify. It seems like I go up there every week, and she is always there to greet us, always there to support us, always there to buck us up and say kind words and I hope accurate words about the work that we are going to do and the difference we're going to make, and it is much appreciated. And we always look forward to seeing you. It makes it worthwhile to go up to Capitol Hill to testify. Thank you. Thank you to all of you for joining us. The Bureau engages with consumers every day, but we especially like to be here with you face to face, talking about the problems that people are seeing and feeling in their own lives. This helps true us to our real mission. Tonight we want to hear your stories about checking accounts. Almost 9 out of 10 American households have at least one checking account. From cashing a paycheck, to making a mortgage payment, to swiping a debit card for your morning coffee, we know that checking accounts are integral to the ways and means of managing your own affairs. The Consumer Bureau was created to improve all of our financial lives. Our mission is to ensure that the consumer financial marketplace actually works for consumers. Plain and simple, we're here to understand your concerns and find ways to help you. We just opened our doors in July, but already we've begun to accomplish a great deal. We've launched our non-bank supervision program. Non-bank mortgage companies, payday lenders, and private student lenders are now subject to federal supervision and oversight for the first time. We've also proposed a rule to supervise the largest debt collectors and consumer reporting agencies. Last month, we adopted new consumer protections for international money transfers, also known as remittances. Under our rules, remittance providers will be held accountable for errors that occur, and consumers will now know ahead of time how much money will be received on the other end. Those who send money to loved ones abroad should not have to worry about hidden fees. And today, we launched an inquiry into checking account overdraft practices to learn more about how they affect consumers. Maybe some of you have experienced this issue for yourselves. For instance, you may have found that you spent $40 for a cup of coffee because your account balance was low when you swiped your debit card. So instead of paying $5 for your coffee, you ended up with the bank tacking on an additional $35 overdraft fee. We want to hear from you about your experiences on our website, consumerfinance.gov. You can tell us your stories about overdrafts and get other information about consumer financial issues. The Consumer Bureau is active on many other fronts. We're taking complaints about credit cards and mortgages. We're shedding light on the private student lending industry and exposing those, as Eric mentioned, Attorney General Schneiderman, who try to scam the military community. But tonight, we're here to listen to you. Please feel free to share good experiences as well as bad ones. We want to make sure that consumers are getting a fair shake, and we want you to know that we're here to stand on your side. So thank you again for taking part in this town hall, and we invite you to share your stories about checking accounts. Thank you.
Now for the fun part. We are at the open mic portion. If you'd like to share words, please come up to one of the microphones. There's one here. There's one there. We want to hear from as many of you as possible. So I ask that you please keep your remarks to around 2 minutes. Please tell us what your name is, what your affiliation is, and we really encourage folks to come up to the microphone.
Oh, hi, good evening. My name is Christina Chase. I'm a student here at Hunter College. I also sit on the board of directors of NYPIRG. Woo, NYPIRG! I agree there's a lot of scams that need to be dealt with, especially with banks. I think identity theft protection is definitely one of them. I think it's outrageous that as a student I have to pay like $15 a month to have, I think, a service that should be free, which is protecting my identity. And I wanted to know if you guys are going to work on free, I guess, identity theft protection, because I feel like that should just be a given. Additionally, this is kind of off topic, but I want to know what stance the CFPB takes on student debt forgiveness, national student debt forgiveness. Thank you.
So thank you for those questions. The first issue, which has to do with a broader category of often credit card or bank account add-on products, which are of, in some cases, real value, of other cases, perhaps questionable value. One of our concerns is the way in which these products are marketed to consumers who may or may not have an appreciation for what they're paying for, what benefit it's actually providing them, and the scripts and the calls that are made to market these products. We have some evidence of that we've been looking at, and it raises real concern. The other issue that you raised, student debt forgiveness, we don't have any power to legislate that. We are very concerned about the private student lending industry, however. We think that it needs to be rendered much more transparent for young people and their families so that they can make better choices ahead of time, know what they're getting into, know what the repayment schedule will be, know exactly what the plans are, not just for next semester, but for the long run. We have been working on a student loan, student aid shopping sheet with the Department of Education, which has received very positive reviews, including from one important constituent, the President of the United States, who is promoting that. And we are looking to do more to try to make it easier for again, young people and their families to navigate what is often the obscure and complicated world of student loans and the difficulty of comparing products across institutions and knowing what the real ramifications are. So that's high on our plate as well.
Thank you.
Thank you for your comments. Could you tell us your name and
Yes.
your affiliation, if any?
My name is Stacy Thompson. I work with the Correctional Association, but I'm also an online student at the University of Phoenix. And I am in a great deal of debt, and they deferred my past loans in order to get me back in school. But now I'm not finished yet, and I'm still paying. I'm paying because I'm in default and on academic probation. But being that we're on a checking thing, even though I have that problem and also some payday loan problems that are outrageous, I want to focus on what you guys are focused on, and that's the checking thing. I switched to one of those Now accounts, one of those prepaid accounts, and it was supposed to be to get rid of all these extra fees that they were charging, all the insufficient fees, and they were only supposed to allow you to spend what you have on that card. So I was wondering how come my account ended up in a negative balance and I'm paying out the pocket for this card that's supposed to, I mean, they took off those fees but added extra hidden fees in there and a whole lot of extra hidden fees. I mean, I'm paying just to check a balance, and I just want to know if it's anything, or is there anything that you can refer other than those now prepaid cards as to having a bank account?
So, Miss, the story you're telling about overdraft fees that you did not realize would be assessed, and you didn't realize that they would authorize transactions that went beyond the amount of money you had available, that's exactly the reason that we are here in New York City today, we have launched an inquiry into this issue. It is something that is common across financial institutions throughout the country. We're concerned about what exactly is explained to consumers when they have the opportunity, as they do under the law, to opt in or opt out of these programs, but we're not clear that the marketing is completely accurate and comprehensive. And in your case, it sounds like you do not feel that you understood the ramifications of this product. Sometimes the information is confusing or misleading, and that can lead to problems. Another problem that you may or may not be aware of, a lot of consumers aren't until they have a bad experience with it, is that the transactions that you undertake out of your checking account in a given day, and they may be through a multiple different means, maybe through writing a check, maybe through doing some sort of online bill pay, maybe through using a debit card, maybe through going to an ATM. Those are all put together and then put into a batch and ordered by the financial institution in different ways, in different settings. And sometimes those are ordered in such a way as to maximize the number of overdraft charges, and people, before they realize they're in any problem at all, have 4 or 5 or more overdrafts in a single day. These are problems. We think that these are problems This started out 10, 12 years ago as or longer, as a product that was a convenience for customers to complete their transactions, often was done gratuitously without a fee. It now has become a significant source of fee income. We're concerned that these things need to help consumers, not harm consumers, and that's why we've launched our inquiry today. Your story is helpful because it's right on target of what we're looking at here in New York City. Thank you.
Thank you, Ms. Thompson. Hi, could you tell us, oh, here. Hi, could you tell us your name and affiliation, if there's any?
My name is Pavel Gerardo, and I actually work for a union as an international rep. I'm not related to that here, but I just came by. And I want to ask a question about child support. The state do a service to parents. They get child supports for one of the parents, and they supply these cards. The people can actually get the child support directly to a bank account. And when people go to collect the child support, these banks are charging extremely high fees. For example, I have a friend of mine who a month she's being charged $35 just for this account to receive the money and then supply it to her. But this is actually done by the state. Giving that service to her. So I wondered if you guys are taking a look into that, because I think it's abusive that, receiving child support for a kid and you also have to pay a fee to receive the money. Thank you.
So let me just ask a question. So the particular financial institution that then charges the fee, that you're required to deposit the money there by the state? That's
No. What they do is if the parent go to the court and they get the child support, they say to make it easier for you, and you don't have to receive a check or every month or every week, we can deposit your money to your bank account so it's easy for you to have access to it.
I see.
So they give you a card, and when you go to the bank and collect that money for the ATM, they charge fee to check the balance, they charge fee to, it's abusive, and I don't think it's fair because the money should go to the kids,
Yep. So this is an issue that comes up in a lot of different settings, not just with respect to child support as you're describing it here, but there are states, counties, and cities that now when they distribute any form of public benefits, whether it's unemployment insurance or maybe assistance for food and other things, they are often now using some sort of prepaid card that is loaded with the money and is loaded over time. But some of those products are better than others. Some of them have fees. Some of them have a lot of fees. Some of them become quite expensive for people who obviously are in a position where every dollar counts. One of the things that we can do and we intend to do is to provide guidance to state and local governments across the country that when they negotiate these agreements with financial institutions, they need to strike a harder bargain. They need to understand the kinds of problems they can get into. Many of the officials who negotiate these programs are not sophisticated in the different charges associated with these cards themselves. And so some of them have struck very good deals. Some of them have struck miserable deals, and it comes out of the pockets of people like you and others. So that's something we're concerned about. We intend to provide guidance for people across the country and communicate with them. In the meantime, you can agitate at the local level with the people who run the program, but it is a problem for a lot of people across the country, not just for you. But appreciate you mentioning it.
Thank you.
Yes, thank you. Hi, could you tell us your name?
I can. My name is Jim Lardner. I've worked on some of these issues as an advocate for Demos and Americans for Financial Reform, but as it happens, I have a checking account myself. And I had this odd experience with a community bank in New York, opened an account, and received what I regarded as a debit card, only to find that the bank charges me, if I call it a debit transaction, charges me $2 each time and asks me explicitly to tell merchants that it is a credit transaction, not a debit transaction, in order to escape that $2 fee. And I went to the bank and I said, hey, but I think you're sort of using me to get more money out of the merchants because they were supposed to get some protection from in transaction fees in the so-called Durbin Amendment. And the bank is completely uncomprehending. They say, you're okay, you just call it a credit card transaction, you don't lose anything. Of course, I do lose something. I can't use the card to get any cash at a supermarket, for instance, because that would trigger that $2 fee if I called it a debit transaction in that way. Had some communication with the FDIC, which seems to agree that this is sneaky practice on the bank's part. They basically, you can't call a debit transaction without this $2 fee. But they don't seem to think there's anything, anything actionable.
Thank you for sharing that. Do you want to make a comment? Or?
No, I'm just reminded that it's not my show, it's your show, and I shouldn't feel the need to answer every single time. But we appreciate that story. It's not the first time we've heard about that issue or problem.
Thank you. Over here on this side, could you tell us your name and share your story with us?
Sure. My name is Lauren Upsall. I'm currently a law student at SUNY Buffalo, and we're here in New York for 3 months studying finance and law. And so my question is about 1031 exchanges. I know that the CFPB is supposed to do a study of these, and that they're one of the only industries right now that I feel like wants to be regulated, and the FTC actually turned them away and said that they didn't want to regulate them even though they had authority. So I know that you can regulate maybe qualified intermediaries on an individual level, but I was wondering if you could comment on maybe how you're going to deal with companies that are involved in these exchanges, and if you can somehow synchronize the regulation between individuals and companies that participate.
I'm sorry, I missed that last part.
Just individuals and the companies, how you can synchronize the regulation of the two, even though it seems like you only have authority over the individuals that participate.
Well, we have authority over any kind of consumer financial product or service, or therefore any consumer financial transaction. And our job is to protect individuals, but we obviously have to deal with the financial companies. Any transaction is a two-sided affair. One of the things you mentioned was the FTC, the Federal Trade Commission. We have overlapping jurisdiction with them. We're working closely with them. We realize that on each of our parts we have limited resources, and we need to make those resources extend as far as we can to impact the market. So we have a good relationship. We're working with them. I'll take your question back. We'll think about it further, but that's essentially how we expect to operate.
Thank you for that. Could you tell us your name? And let me just remind folks that we do want to hear from a lot of you. So if you could focus your comments to about 2 minutes, we would greatly appreciate it. And that will ensure that we hear from as many of you as possible.
Okay. My name is Christopher Mall, and I've been a retail worker for many years and also a member of the Retail Action Project. I am voicing my thoughts in regarding the credit check to get hired and the fees collected for using debit cards given by employers. First, I feel that the credit check practice should only be used for candidates applying for bank telling positions and employment in that stature. I feel that it is wrong to be denied employment as a retail worker, a manager, or even outside of retail if you have less than perfect credit, unless you are a candidate seeking employment in a bank. I feel that the credit check for grounds for being hired is unconstitutional in the way of invading one's privacy. I also feel that if you're not seeking employment in a bank, no credit check is necessary. Because after all, we all need money to live on, to pay our rent, pay our bills, invest in something like a house, take care of ourselves and provide for our families, and have some recreation as well. That is the purpose of getting gainful employment, right? We live in tough economic times, and the result of not getting suitable gainful employment because of you have less than perfect credit simply just adds to the burden. Second, I'm keeping my second point short. This is in regards to the fees collected by the debit cards that employers give out if you don't have a checking or banking account, those hidden fees. My workplace does provide these debit cards for employees who A, don't have a checking or savings account, or B, choose not to have their wages direct deposit in their accounts. The fees collected to use a debit card only provide the employer, only further benefits the corporation CEOs and upper management. Those fees certainly do not benefit employees. Employees who work for such employers who are more than likely don't truly appreciate the outstanding work their employees do and the dedication these employees have should not be charged these unnecessary fees who just to make the CEOs richer. Employees work hard for their wages each and every day and therefore should not be charged these unnecessary hidden fees these debit cards have. In closing, I strongly urge that these fees be lifted and these corporations find another way to make a profit without dipping into employees' wages, which employees work so hard for in order to pay their rent, mortgage, bills, put food on the table, and provide for their families. And also, in closing, only conduct a credit check only for candidates applying for employment in a bank or some other financial position. Thank you.
Thank you, Mr. Mall. We appreciate that. On this side, Sarah.
Hi, my name's Sarah Ludwig. I represent NEDAP, and I want to thank you for holding this town hall. Just the stories that are coming up are making some of us who do legal services work a little bit anxious because we feel like it would be really helpful for everyone in the room, especially people who've spoken so far, to know that there are a lot of free legal services available in New York. And I'll give you a website, which is lawhelp.org. And there are really reputable, free legal services to deal with every single example we've heard so far, to help people address the problems themselves, and then also to give people assistance where they can't resolve them on their own. Also to call 311 Credit Counseling and Financial Empowerment Network. Thank you.
Thank you, Sarah. Really appreciate that. And that's an important reminder. I would also encourage folks with credit card complaints or mortgage complaints to call the CFPB. We have a 1-800 number. It's 1-855-411-CFPB, 1-855-411-2372. Hi, could you tell us your name?
Yes, my name is Carolina Ferreira. I'm a member of the Retail Action Project. And as a low-wage worker, I've had situations where I've had $20 or $30 in the bank, and you get hit by a $35 fee, and your account goes negative, and then they add another overdraft fee over that. And that just pulls a toll on whoever has a low wage, like many retail workers in New York. I've also had cases where I've had $8 in the bank, and I deposit a $1,000 check, and they just hold that for 2 weeks unnecessarily, for your protection, when it's really just sitting there money that I needed, and it's making interest out for them. This is why, low-wage workers turn to places like check cashing places or even Walmart, who is now offering, debit cards, money transfers, and all that to their customers and employees, charging insane fees. And I also had a question about that. Do you see a role for your agency in regulating Walmart, and if so, how would that look like?
Since it's a question, I guess I get to answer. The law that created the Consumer Bureau has an exception to our jurisdiction for merchant transactions. However, that only applies where the merchant is selling something to a person. If the merchant is engaged in providing financial products and services, consumer financial products and services, then we do have the authority to look into the issues and to potentially act and take enforcement action if it's appropriate. So I would say that in these instances, we'll carefully consider your story and other stories, and if it's appropriate to act, we believe that we could act, yes.
Thank you for your comment. Thank you. On this side?
Hi. My name is Daisy Tomaselli, and I'm also a student at University at Buffalo Law School. My question pertains to payday loans. I know the second person that spoke tonight had a personal story regarding payday loans, and I know it's something that's on the CFPB's agenda to hopefully regulate and reform. My question is, in looking at payday loans and glancing at them, it seems like one of the biggest issues with payday loans is usury caps in the state-by-state provisions and regulations or lack thereof that pertain to usury caps on payday loans. In the Dodd-Frank Act, one of the only specific things listed is that one way that the CFPB is not going to be able to regulate payday loans is through usury caps. It seems to me that the lack of a cap on usury limits, allowing sometimes payday loans to roll over and roll over and roll over until the interest rate is exorbitant, sometimes up to 700%, it would be one of the best ways to regulate payday loans. Since the CFPB can't regulate payday loans in that way, how do you plan to regulate them or to reform them going forward?
So usury caps can be maintained at the state level. My understanding is that New York, many people at our roundtable earlier took great pride in the fact that in a pretty fierce fight over the years, New York has maintained its usury cap and not permitted payday lending to become an exception to that cap. I can tell you stories from Ohio where we had a usury cap for years. There was an exception created in the mid-90s that allowed the payday lending industry to spring up in Ohio. There was a big legislative fight in 2008, 6, 7, and 8 that led to repealing the exception and putting a cap on payday loans of 28%, which is pretty much inoperable for them. That became a ballot fight in Ohio. These are fiercely fought efforts. But anyway, that all can be done at the state level, and it's being done in a number of states, which have either imposed interest caps or prohibited payday lending outright. And one of the things that's important to keep in mind is the fact that there's a federal bureau with authority to do certain things and perhaps not others doesn't prevent people from continuing to work aggressively at the state level to address these problems, as you've done in New York. We do not have, as you noted, under our statute, the ability to cap interest rates or set interest rates or set the price of any product. We do have the authority to identify and address unfair, deceptive, and abusive practices. Payday lending is one of the very specific non-bank areas that Congress told us very, very explicitly that we were to examine institutions and to have jurisdiction over that entire market, and so it's something that we take seriously as our responsibility, and I think we have a number of ways to try to address issues as they arise.
Thank you, Ms. Tomaselli.
Thank you.
Hi, could you tell us your name?
Yes, hi. My name is Bertha Steven, and I work for Office of Financial Empowerment as a recruitment specialist, and I'm a former banker. And I go around working with seasonal workers, and their salary is $9 an hour. And the past month, you know, every time I go to one of the sites, they've been asking some questions, which I'm so happy that I can ask on their behalf. And one of them is what is the time frame if someone who wants to open a checking account with Bank B, but was on the check system with Bank A? Because it varies from bank to bank, and as a former banker, I know that. And even from branch to branch. Many people may not be aware of that. So are we going to have a set rule that it's going to be like 5 years? I know some banks said that if you have check system 2011, 2010, then you cannot open a bank account. But some banks might say only if the amount is maybe $100 or $200, you know, then it's okay. So are we going to get a set rule to know exactly like what's the time frame? Also, before I'll just give you time to answer all the questions. The other one is about the amount. What is the specific amount? Is it, you know, some people, again, is it 600, 1,000? I had someone who asked me on Friday. She told me that she had an account with a bank and she owes about 500, and she was trying to go to another bank and they told her no because it was too much. So these are two questions and one more. Because I'm sorry, as my job, I know a lot of people ask me this question, so I need to go when I'm going over there tomorrow, so I need to make sure that I have something to tell them.
I'm afraid we won't have specific answers.
I know, but at least I'll get an idea.
Okay.
Okay. The low-income families have rely on check cashing institutions and pay huge fines. huge fees, and we have said that I think it's an average of $445 a year that people pay on fees. So we would like to know, somebody said New York has a cap, but is there a cap of how much that the check cashing place can charge you? Like, I'm thinking like from if $10 to $500, it will be one fee, and $500 to above one set of fee, because, when you go to a check cashing place, there's a schedule, and it tells you how much. So is that part of, again?
So I actually think that a representative from NEDAP who knows New York City laws and New York State laws very well, very specifically, might be someone that you should connect with so that they can answer those very specific New York City kind of questions.
Yes.
No, I would just generally say beyond that, one of the things you're addressing is the fact different banks charge different fees, and it's often very hard to know what fees they actually charge and when. This came up when the bank transfer day was being promoted in the fall, how difficult it is to compare and shop among different bank accounts. That's the kind of thing that the Bureau is very interested in. We want it to be easy for consumers to navigate the financial marketplace. There are other efforts underway in this realm as well. The Pew Research Organization has a sample disclosure that's being adopted by some of the banks, and we're going to be working in this space to try to make sure that consumers can make informed choices. That's, I think, of the different questions you asked, that's what I remembered to
Thank
say.
you, Ms. Steuben.
All right, thank you.
Hi.
Good evening. I'm Bernelle Greer, and I'm the CEO of Neighborhood Housing Services of New York City. We are a NeighborWorks organization, which I think you're familiar with 230 organizations across the country. And for members that are here, along with NEDAP, we also provide free services for families that are facing foreclosure and or that need financial capability building. I'm very interested in, and have a lot of information to also share with the CFPB regarding the mortgage crisis. We've been working in this market since 1996 on these overall issues. So it's not something new. It's something that we saw coming and wanting to make sure, again, that we're helping to inform that things don't happen again in the future. But I'm standing here today because my daughter graduated from college and has student loans outstanding, but also opened up a checking account. And she went on to online banking. And when she did, there was, with the bank that she's working with, there was a third-party intermediary to provide the online banking. So she was able to make a automatic payment, and the check was cut when there were not funds in her account. So she ended up amassing fees, and it ended up being a check that was made payable to me. And on top of that, I was also charged fees from the financial institution for the insufficient funds. So I don't know how the First Bank is able, through a third-party provider, to have a check cut when there aren't funds. You would think that it would be an official check or certified check or something in terms of the transfer and not generating the fees. The other thing is that in being a former banker, I ran organizations like Fleet Community Bank in this market, and so have a lot to share around consumer credit and checking accounts. And also with that, as the gentleman had said before, there are several low, moderate income families, or just even anyone that will not be part of the banking system. And using check cashers, and largely because when they look at that $400 worth of fees over a year, it's less than the fees that are charged under the banking community. So I'm looking forward to being able to engage more often with you and sharing
Thank you, Ms. Greer. Before we provide a response, I just want to remind folks to allow others to speak, and that means try to stick to about 2 minutes if at all possible. I would also encourage people to go to our website. We have general information, sometimes directly appropriate to the question, When it's obviously a state-specific matter, it won't be on our website, but please do go to consumerfinance.gov. And on this side, can you tell us your name?
Muchas gracias por esta oportunidad de tener esta discusión abierta.
Gracias a usted.
Mi nombre es Amado Rivas, soy miembro de Se Hace Camino en Nueva York. En el 2010, Walmart empezó a promover préstamos a sus miembros y Sam's Club. Residentes y líderes están preocupados que Walmart pueda explotar a sus consumidores con sus ofertas de crédito y préstamos, que recortarán los servicios que bancos comunitarios y otras instituciones reguladas ya promueven. Si estos bancos son exterminados, Walmart podría demandar pagos altos y condiciones de reembolsos irrazonables. ¿Cree usted que la CFPB podrá examinar los riesgos asociados con Walmart y su expansión en servicios financieros?
Es posible que lo haremos por la excepción que existe, pero es un problema más complicado y tenemos que colectar más información. Were you going to translate?
Yeah, I was going to
Okay.
translate for him. He said his name was Amador Rivas, and he is from Maker Road, New York. And in 2010, Walmart began marketing loans to its Sam's Club members. The company focused on women, people of color, and small business owners. Residents and leaders here are concerned that Walmart could take advantage of consumers through expanded loans and credit offerings that undercut what community banks and regulated actors provide. If those competitors are wiped out, Walmart can demand higher fees and unreasonable terms for repayment. He wants to ask you, can the CFPB examine the risks associated with Walmart expanding into loan and credit market?
So this is actually the question that was asked previously. It's a very complicated issue. We have heard from a number of folks across the country about the impact that this has on their well-being, their financial well-being, their neighborhoods and communities. So we are in the information gathering stage about this. It is a problem that we are aware of, and we are assessing the nature of it.
Thank you.
Thank you. Muchas gracias. On this side?
Hi, my name is Joan Ferreira. I'm a senior financial advisor with Neighborhood Trust Financial Partners. We are one of the organizations that Nida mentioned that works all throughout the city providing free financial advice. So if you need a financial advisor, just dial 311 and we're going to be there for you, or on any other of our organizations. I wanted to first testify about this overdraft fee because the reason why I'm a financial advisor is because of that. When I was in college, in University of Buffalo as well, weird. I was working, I was making about $150 every 2 weeks. And the day before the paycheck, it was a Thursday, I knew on the bank that I had like $10 left. So I made about 9 purchases, all that amounted to less than $10. But I put gas on my car for $20 the day before, and that transaction did not clear. So the next morning, I checked my bank and I have minus $185 on my account. And Citibank charged me 10 overdraft fees. And I had to spend a whole month in college eating ramen noodle soup. I know some people might know what is that about. So I have a few suggestions into why is it so necessary for us to work on the overdraft fees. The first thing is banks are still offering the overdraft because that's part of their their general account. Like when you ask for the free checking account, that free checking account has overdraft, not overdraft protection, overdraft on that account. So one of the things that we need to do is we need to make banks not being able to offer the overdraft until a month later after the person has the bank account. That's one thing that we could do. Another thing is we could tell them you need to use simple text to explain overdraft. Will you pay $36, $40 for a cup of coffee? If they say no, guess what? They're opting out. They're not opting in. One last comment. Everything is evolution. 10 years ago used to be check cashing places, but make no mistake, prepaid cards are the new check cashing places. And we need to make sure that we regulate that market, because what's going on is people are using prepaid cards, even though it's a bank account, most likely provided by the bank or bank. But the whole deal is people are not progressing. They're not going into knowing how to use financial services better. All they're doing is stopping, trusting banks and credit unions to do that, and we need to work on that.
Thank you, Mr. Garega. I really appreciate that. On this side.
Good evening. Thank you for having me here. My name is Maritza Silva Farrell. I work with Align, the Alliance for a Greater New York, and this is great. I have to say, I'm very excited to just be here and see and hear some of the stories. So, being that I work for an organization that actually deals with a lot of community groups and hears the stories, we've heard so many stories. So, I had a hard time picking one. But I can tell you that going back to what the gentleman before was saying, those prepaid debit cards are a big concern, especially who distribute them. Probably some people here are aware about Green Dot and some of the investigation that is happening in Florida right now. And if you look at, who is actually distributing these debit cards through which company, going back to some of the comments earlier, the company is Walmart. So it's a big concern. We know that there's an investigation going on in Florida, and I will encourage, some of the members here to look into that as well, because it will be something that is not only affecting Florida. If Walmart is to come to New York, will be also affecting New Yorkers, as it probably is already in upstate New York. So I just want to thank you for this opportunity and also give the heads up for that.
Thank you so much for those comments. On this side.
Hi, my name is Peter Sabian. I'm a Hunter College student. I'm employed with the Personal Injury Law Office in Midtown. As the gentleman before me, he mentioned that he had 10 overdrafts, and I had my share of overdrafts as well with my bank. What happened was the similar situation where I had no idea that I had an overdraft, so I had like 3 purchases in one day, like a cup of coffee at Dunkin' Donuts, a veggie patty at Subway, and something else. And then the next day I get $95 overdraft. So. But I had my savings account, which they could have extracted money from there, which they haven't. But then after that, when I went in and asked if they could waive some of the fees, they said, well, it's a bank's policy, so they couldn't. So I'm not sure if it's part of when you open the new checking account, whether they offer that, because I opened it like 7 years ago. But if they don't, they should definitely offer the overdraft payment plan right up front and not hold out until you get several overdrafts and then, offer it. So it's basically my story. So,
thank you for sharing that.
Welcome to New York.
Thank you. It's great to be here. Please tell us your story.
My name is Patrick Purcell. It's just a statement. My name is Patrick Purcell. I work for United Food and Commercial Workers Union, Local 1500. We represent 23,000 grocery workers in the New York area. I just want to add on about a company you might have heard about, Walmart. Needless to say, we have a lot of concerns. Our members are excited that there's someone actually out there now looking out for them. Anytime you hear something consumer protection, it's great to hear that this is something that's happening now. Unfortunately, a lot of states are trying to get rid of consumer protection, which is amazing. So they're excited that you're out there, and they're also excited and hope that you'll be proactive and aggressive in watching Walmart's practices. Walmart's practices in every aspect of their business model is predatory. Walmart does what it needs to do for Walmart and Walmart only. Anything that they say that they're doing this for the consumer, or they're doing this for the small business, it has always led us to see that that's not true. So instead of many folks who have unfortunately had to wait for Walmart to do what we know they're going to do and then respond, we hope that you're going to be very aggressive and proactive, and let's try to actually stop the criminal this time before they actually rob the poor people. Thanks.
Thank you. On this side.
Good evening. My name is Michael Villacruz. I'm a recent CUNY undergrad graduate, and I have 3 quick points. The first thing, in regard to helping with checking accounts and with American finance and regulation, bring back Glass-Steagall, the Academy Award-winning documentary Inside Job. Bill Moore, PBS, Bill Morris have both echoed this. We need this protection that has lasted for decades since the Great Depression. It was repealed during the 90s. That's the first thing that would help. They have many, many consumer advocates, financial experts, and economists have said for consumer protection, bring back Glass-Steagall. It was 10 pages. Frank Dodd, it helps some. It is over 100 pages. Secondly, how do we, U.S. citizens as well as the U.S. and state governments, both change the confusing makeup and the quote-unquote organization of U.S. bank regulators? I called the U.S. federal government a few days ago in regards to this town hall to ask who is the regulator for my national bank. They told me it is not the type, national, community, or otherwise, it is the individual bank's name that determines the regulator. This is confusing. We need to have a one phone number, one website, essentially like the Consumer Financial Protection, consumerfinance.gov, one-stop bank shop, to make it easier for American consumers to know who is regulating their bank. And lastly, Director Cordray, does the Consumer Financial Protection Bureau support the financial transaction tax, aka the Robin Hood tax, aka the Tobin tax, that would help pay for the costly regulation of Wall Street?
So I can answer the second question pretty easily. If you need help finding out who the regulator for a particular financial institution is, you can call 855-411-CFPB. You can talk to a live operator and they will help you make that kind of a determination and transfer you over to the appropriate financial entity.
As for the tax on financial transactions, that goes beyond our jurisdiction. That's a matter for Congress to determine. So I'll just leave it at that.
Thank you for the comments. Appreciate them. On this side, please.
Hi, my name is Kathy O'Neill, and I'm part of the Occupy Wall Street Alternative Banking Group. And I guess I just have three opinions to urge. First is to set up the mortgage situation so that the investors and the homeowners have aligned incentives to come to the table and make a deal. That will help homeowners. Right now, the incentive is for the banks to extract as much fees as possible. The second is we're working to make it easier for people to figure out which credit unions they're eligible for. It's actually not easy to figure that out. And I urge you guys to get involved in that because it's easy once you know which credit union you're eligible for to actually move your money. But if you can't figure that out, it's hard. The last thing I wanted to mention is that we actually, our group submitted a letter in your public commenting yesterday because you guys now have jurisdiction over the credit modeling people, the people who make your credit scores. And it's our opinion that these credit score models, by the way, I should say that I am a former hedge fund quant, so I know all about models. These models have no right to be private. People should know exactly how they're being scored. I don't see a legitimate reason for them to be private. Thank you.
Thank you for your comments. Appreciate them. On this side.
Hi, my name is Kristen Uredig. I'm a financial advisor with Neighborhood Trust Financial Partners, and I'm based out of Brooklyn Cooperative Federal Credit Union, which, by the way, has a checking account that will draw from your savings if you overdraft. There's a $3 fee, which is not as bad as some of these other institutions, but that's not what I wanted to say. I wanted to share a lot of experiences that I've had with clients around checking and overdraft fees. A lot of people don't realize that they can opt out, and so it brings up the issue for me that it's great whatever protections we can pass for them, but then how do we also communicate that message to the public so that they know these protections exist? And there's been a very aggressive marketing campaign by banks to make sure that they do opt in to overdraft fees, and a lot of fear tactics around that they won't have access to their account in the event of an emergency are used to keep them from opting out. So they have so much money and marketing power behind them, and the other side doesn't. So how do we balance that out and communicate what protections do exist? Thank you.
One of the things that we proposed today as part of our inquiry is a sample penalty fee. Penalty box fee form that would be a very conspicuous disclosure of any overdraft fees that you have incurred, what actual benefit you got, whether it was for a $10 transaction, you got a $35 fee, and that would be linked to information reminding you that you have rights, you have the choice whether to opt in or opt out of these programs. We're going to be getting comment on that, and we'll consider how to proceed to make that clearer to consumers, because we share your concern as to whether consumers are really understanding what's happening with this product.
Thank you for your comments. On this side, please.
Hi, my name is Nisiani Reconescu. I I'm a former retail worker for many years, and I'm speaking in behalf of the Retail Action Project. Just want to address one issue, employment discrimination as negative credit check. You know, we have many millions of employees have lost their jobs due to the financial crisis. And how do we address that? They lost their credit, and now they cannot get a job just because of their negative credit. So it seems that it is a vicious cycle, and how do we make it into public policy to avoid discrimination in employment? That's my only concern. Thank you.
Thank you. Appreciate that. On this side.
Hi, my name is Akshat Tawari. I'm a member of Occupy the SEC, which is a subgroup of Occupy Alternative Banking. We submitted a letter to 4 federal agencies this past week relating to the implementation of the Volcker Rule. My question is sort of jurisdictional. Dodd-Frank gave the CFPB authority over consumers, and if that includes checking accounts, and checking accounts are deposits, then would that not also include the Volcker Rule into the CFPB's ambit? And I think that's an important question because the Volcker Rule is unfunded at present.
So the decision to adopt the Volcker Rule is not a decision that the CFPB has authority over. It is a decision that other parts of the federal government do have decision-making authority over. And I know it's under active consideration right now exactly how that would be implemented. So.
Thank you for your comment and question. On this side?
Yes, my name's Arthur Hansen. I'm an entrepreneur in the green energy field. But one of the issues that hasn't been really in terms of overdrafts is the fact that in the news some time ago, there was talk about certain banks reordering the order that your checks and debits come in so that they could charge additional debit fees. And I never really got a sense from this that anything was really done to stop it. They were trying to get some banks to refund some of the money, and they were trying to refuse to do that. Now, in industry, I've worked for a lot of companies, and if I book a sale a day before it happens, I can go to jail for that. Or if I book anything, anytime other than it exactly happens, and I know people have been fired, I know people that have been gotten into serious trouble for doing this, even in cases where it had no long-term effect on the company's health or anything. It's just that you can't mess with the books at all. So to me, it kind of gives an implication that banks don't play by the same rules and aren't required to play by the same rules as other companies. So I think, to me, that's a big issue. I don't know if it's happened to me. I've had times when personally my bank account's been very low because in trying to start businesses, there's times I've been on the verge of bankruptcy myself. And I've had overdraft fees that I didn't expect on my debit card. I have no way of knowing when a number of them came in. Did they come in the right order? There's no way that an individual can tell.
Thank you for sharing that. That is something we've heard from a number of folks throughout the day.
And it is one of the specific concerns we've highlighted with the overdraft product is how transaction ordering occurs. It's something we're going to be looking at carefully as part of our inquiry and developing an action plan by the end of the year.
Good, thank you.
Thank you. On this side?
Hi, yes, my name is Joe Coleman. I have 12 of those check cashing places in the Bronx and in Harlem. I just want to say, I think oftentimes it's very easy to say those check cashing places, but I think we have, if you're low income, we are faster, cheaper, and better than banks in many cases. Our fees are transparent. You walk in, there's going to be no question what it's going to cost you to cash a check or pay a bill. Basically, it's going to cost you $1.86 to cash a $100 check, and you can pay any bill on the face of the earth for $1. So I think for a lot of people, we're actually the low-cost alternative in many cases. And certainly in terms of transparency, you can't beat us. But I just want to make a little commercial for check cashing and go on to another question, which I think has kind of come up a lot today in the theme of the conversation, which is debit cards. And more people today are having their payments, both by state government, federal government, by employers, being pushed onto debit cards. So we're having more and more money going on debit cards. More and more of my customers walk in with money on a debit card, and they don't have any way of getting the money off the card. So if you have your Social Security payments, for example, or your unemployment check, moved to a debit card, and you now get a direct deposit or debit card, you don't have any way of unloading that card. I think the Bureau could take a look at this sort of, as you talked about the various fee structures and the various contracts that different state officials and government officials make for debit cards. But I think one of the things we have to take a look at is the whole process of unloading those cards. There really isn't a way for somebody to walk in and get $1,000 off of a card. If you go to an ATM, there's usually a limit of $400. That's kind of a structural issue I think we need to take a look at. Thank you.
Great. Thank you for sharing those comments.
Hi. Hello. My name is Gigi Guerrero, and I'm also a check casher. I'm the Human Resources Manager for Joe Coleman. I worked for his company for the last 17 years, and I started as a part-time cashier in college, working there. I came to this country with a student visa, and I learned a skill as a check casher. And what I wanted to say is that people choose check cashing. It's not around it's not gone. Check cashing is as strong as it's always been. And people choose check cashing because, like Joe said, our fees are open and they're clear. They're posted on the walls. They're also regulated by New York State Banking Department. We don't come up with our fees ourselves. Right now, they're 1.86%. And before you walk into the store, any teller will be able to tell you how much you're going to pay for your check to be cashed. But people choose check cashing because they're convenient, they're fast, and they work for everybody. I've been a consumer at check cashing before I started working for one. I used to pay my bills through a check casher. I still have my prepaid debit card, and I bank with a credit union. So I wanted to say that I've seen taxi drivers who need to make a deposit at 3 o'clock in the morning, and they need a safe place to deposit the cash. They can come to a check casher because we're open, and we're well lit, and we have beautiful stores. And I've also known single business owners who cannot wait for 5 days or 2 weeks for the check to clear. So they come to a check casher. We know their name. We know what they need, and they can get friendly service and get the check. We take the chance on them, and they get the cash out, and they are able to make payroll.
Ms. Guerrero, thank you for your comments.
One more thing I wanted to say. I'm sorry. We are regulated, and we're there to serve you. So don't overlook check cashers.
Thank you for that. On this side.
Hi, how are you doing? My name is Naoki Fujita. I work at the Retail Action Project, so we heard from some of the members that we represent today. But actually, I thought I'd share my own personal story that I had. I work by day, go to school at night. I'm a law student. And one of the reasons why I went to law school was a situation with hospital billing and medical debt. So actually, I was really curious to know whether or not the CFPB has any power to regulate that. Because I bought a health insurance plan. I didn't realize that it didn't cover a lot of just very, very basic procedures. And I guess the two issues that I have is that the statements that you get from health insurance companies are really confusing. I don't understand why there's a billed amount, that there's the paid amount, there's your responsibility. A lot of times there's no way to contest it because I don't even understand what I'm receiving in the mail. So that's the first problem I have. I had to go to a hospital in New York, and I got a procedure because I had an infection. It cost me about $10,000, and it was extremely hard for me to, I think I was a little bit naive, but to negotiate with the hospital. And I found that even though I had done everything they asked me to do, I had pre-authorized this procedure, that they still told me that I was going to be on the hook for this money. They made an offer to me at a lower amount, and then they kind of rescinded the offer. And I just found the entire experience really, really disheartening because it wasn't clear what I was owing. And actually, when I went to the hospital, they had told me that this entire thing was covered by my insurance. So I know that that's a different area, but it affects people's financial lives. And my experience of the health system is that it's the exact opposite of financial empowerment. It's like financial disempowerment because you don't know what you're getting into, and you're often under pressure to make a decision when you have a medical problem. And so you just kind of sign the dotted line, and you don't know what kind of debt you're going to incur.
Those are significant issues. By tradition and law, they're not handled at the federal level in this country. There's an exception to our jurisdiction for insurance issues that'd be handled through your state Department of Insurance, or perhaps Department of Health would be the right place to go to make those inquiries, I think.
Thank you for sharing that. I'm sorry to hear about the very difficult circumstances and appreciate how much courage it took to share that here. Thank you. On this side?
Hi, my name is Brian Forsyth. I'm an independent filmmaker. I've been researching and working on a project on binding arbitration clauses for some time, and it doesn't come up as much in checking accounts, but more in credit cards and other things where I've heard a lot of stories of people getting into conflicts over different things and finding out that they've signed away their right to access the courts and have to go through binding arbitration, which is outside of the court system. So I just wanted to make mention of that in here, and am wondering what the Bureau is if it's looking into binding arbitration, and what kind of jurisdiction you have.
So the Congress required that we should study the problem of arbitration clauses. We're launching that. That's underway for us this year. And then based on the study, depending on what we determine and what the conclusions are, we have the ability, if it seems appropriate, to write rules around that issue. So that lies in the future for us to make that determination.
Thank you, Mr. Forchek.
Thank you.
Right behind you.
Hi, my name is May. I'm from Habitat for Humanity, New York City, via AmeriCorps. I just have a brief comment. Basically, my issue with checking accounts is not so much the overdrafts, but the extremely high minimum. I switched from one big bank to another, and they're both minimum $1,500 a month. Otherwise, they'll charge you a $12 fee. So I don't know why it has to be such a high minimum, and I don't know if you guys are going to look into it or something.
Thank you for your comment. Appreciate it. Right here.
Yes, hi. My name is Kevin Stump. I'm here on behalf of the New York Public Interest Research Group at Hunter College. Thank you again for holding this important forum. And there's been a lot of talk and a lot of great input that you guys have received about checking fees. I need to ask, as we come to a close to the program, that you do this type of forum for student loans. I mean, we're here at the college. I have student loans. I'm a graduate student. This is like...
Great idea.
Okay. Thank you.
Thank you. I think we are at the end. Thank you so much for taking the time from your very busy day to talk to us, to tell us your story. I encourage you to visit our website. We have website functionality called Tell Us Your Story. It was great to have you all here, and please come visit with us again, even if it's over the internet. Thank you.
So I guess that's a little bit of a problem, huh?